What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for February 10th, 2023. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. Now, today we started seeing some pretty heavy selling, especially towards the back end of the day. One of the futures started climbing up, possibility of interest rates creeping even higher than 5%, which is quite scary nonetheless. But nonetheless, there was a stress test as well that also came out today. Stress tests are done every so often to essentially kind of capture like worst case scenarios and see if the bank can handle it. So that did come out today, and again, did not help with the selling. Nonetheless, right now we're really worried about core. The scenarios of the stress test or whatever are great, whatever the case is, but what we're really concerned about is core and what's going to come of the core. Now, a lot of people are potentially thinking that the core might actually start pushing back up, which could be a very big issue. And I said if there is any increase in core inflation going back up, it is going to be a major, major problem. You're essentially almost resetting the clock as far as two more rate increases, and how big those rate increases would potentially be, and if it's just two. So we will see. Again, there's a lot of anticipation coming into this core. The market needed to really sell off and have that reason today. Like I said, we've been playing about 100-point ranges, roughly from that 4,200 to the 4,100 is kind of what we're playing. We did close below that. So question is tomorrow, do we gap down? If we gap down into tomorrow, that could be a huge issue. We do have the concerns about China as well, and Biden speaking on that as well today. So that doesn't help the scenario either. You get a new, fresh, bad news, which is not something we've typically got, right? We've had this hopium essential spike that things are going to get better, right? With Powell even stipulating on Tuesday that it was just signs of disinflation, and not across the board. And he again pointed out that rental units are still extremely high, and so people again are essentially being consumed by what's the inflation that's currently out there, plus battling the rates, so they can't afford a home to purchase. And then also, not only that, people are getting laid off left and right. There are more layoffs today, right? So it's every day there is more layoffs. Yesterday was Zoom. I can't even remember who it was today, but there was another massive amount of cuts today. Some other big corporation. It eludes me to who that was, but nonetheless, this is what's going to continue to happen, right? Is you're going to continue to get more layoffs until rates come down. This doesn't include the first phase, and the first phase is starting to wind down from increases to get to a stable rate in which they're going to hold. So we're still getting the lagging effect of the rate increases. Again, we have to understand that we came in with these increases at a very historical rate to try to combat inflation, because the Fed was behind the eight ball. Now at this point, again, uh, Powell's already stipulated that we will see a lot of pain, and we're going to see a lot more pain. Now the problem is we really don't want it over 5. We can't handle it where it's at now. Can only imagine what it's going to be like if we did bump up to potential anything over 2.5. 2.5 is still even extremely high. And just to see if that happens, maybe Powell does dial back because it does get to be too much. I don't think we've seen that pain because that's not what's being advertised, and I think that's what the problem is that it's being advertised that we can still take pain, that the economy is still growing and we're in this growth recession, yet people, can't barely afford to live, period. Now, it depends where you're at, where you're from, what career you're in, whatever the case is. But the biggest thing is it's still a struggle. It doesn't matter how much money you're making; everybody's getting hit off of the battle of inflation, the Fed, and interest rates, and seeing what happens. So again, we had some heavy selling today. It was much needed. Question is, do we keep selling? Maybe we hold here. Maybe we push back up to tomorrow to the 4,200, or try to make an attempt. Now that there's this trend line, so maybe only to the 41.34 tomorrow. We'll really see how that does play out, but it is definitely a big time struggle, and trying to and see what happens. Right, the core is going to have a lot of weight, pivotal or not. Even if it's a core which still gradually coming down, even if we drop down to 6, or maybe even 5.9, again, still very high. That's not going to cause the Fed to just stop raising or increasing rates, right? The Fed will continue to throw on the 25-point basis move, at least in the next one, if that's the case. But the thing is, again, we do have another core before the next monetary policy, so we will have 2 cores. We'll see how that does play out. Again, it's a revised core inflation report, so I have to see how much the numbers change, and that they're manipulating a lot of different reports to try to make things look good. Things definitely just are not good. Things are looking really bad, and yet we're continuing to pump. But we don't have, people aren't willing to put risk on right now because the ground is still too shaky. Maybe with a core, the market might pump a little bit. Maybe we pump back to 4,200, maybe 4,300. But right now, I'm not seeing it. It's not enough to push us to all-time highs, in my opinion, and then wait for next monetary policy. So again, depending heavily on what comes of that report on Tuesday, that is going to be the event we're waiting for. There's other data that comes out tomorrow. In my opinion, that's only going to have an intraday play. Again, it's overshadowed by what's going to happen next Tuesday. So something I talked about before was we're going to even go into monetary policy and looking at earnings and everything else. Even if the market ran up, right, it's always foreshadowed about what's going to happen with Powell and what he says and what monetary policy will be, because that's going to dictate what's going to happen in the economy. So we see what happens from this point. We did have some earnings. We did have PayPal earnings. Again, they missed. A lot of companies are still missing on revenues. Again, I'm saying a lot of these companies aren't great, right? Expectations are in the dirt. And if your expectations still come on par, then some of these stocks are still pumping, which is absolutely absurd in my mind. Like, things are really bad. Like, they shouldn't really be pumping. Again, trying to separate essentially the economy from the stock market, because the stock market will pivot, but you have to also understand that this is why I'm not thinking we go back to all-time highs, because it's not the news that we're getting and the things that we're seeing doesn't build a bull case that things are going to go up. Right now, it's all based off of hopium and small things. Again, if you look at it top down, inflation's still very, very high at 6.5. And again, interest rates, not only is, again, inflation high, interest rates are also high. So you're not only battling just inflation, you're battling also high rates. And so you're stuck in between, potentially getting laid off, can't buy a home right now, or can't get knocked out of from a lot of your essentially pool of homes or and rental units, essentially knocked way down because of interest rates. And so you hope that everything just plays out. And so a lot of people, again, are liquidating a lot of nice things they accumulated essentially over the pandemic to get extra cash for fractions of what they bought it for. Now they are looking for the next thing is housing, and understanding that people, again, the turnover on HELOCs and the amount of HELOCs that people, or home lines of credit people, are taking out on their homes is getting higher and higher, which again is not great. Credit card debt all-time high, right? All these things are adding up more and more and more, and you're going to tell me that we are going to see all-time highs and things are okay. There's something bigger that's going to happen here, and we're on the brink of whatever that is. And again, we'll see what happens. We'll go day by day. Again, we're getting a natural cycle to the downside, so we have to keep that in mind. But we see. We wake up each and every day, and we see what we get after the digestion. So SPX daily, again, we broke and retested. We're trying to retest that 20 EMA daily. Again, if we do start breaking down below this, it's going to be pretty choppy in between here. You got the 20, 50, 200. You got the 20 EMA monthly. You got the dailies, the monthly, the weeklies, all kind of just providing a really strong support, to be honest. But if I'll be honest, if the market just starts buttering through these supports, that is definitely not a good sign. And fear of a depression or anything like that could really be that catalyst that sinks us. But we have to see more. If we get more data that shows that that's what it is, and this is why you get manipulated data, because or you just won't get the data, is another thing that could potentially happen as well. And then you're not going to see what's really going on, and so you're just going to get a story to feed hope, right? Because people, if people get panicky, then chaos happens, and then you can't do anything at that point. I think we're getting pretty close to that point. So it'll be interesting to see with Target and Walmart and see what happens with essentially stolen goods, right? And those numbers were absolutely absurd. I want to see what they are this time around, especially from Q4 on how that played out and how much they're losing from that as well, right? The increase of theft is growing as well, which is not good. But when in dire needs, right, what else are people supposed to do? So SPX. So we'll see. We'll see what happens there. It needs bulls. You really need this thing to break back up. We need to break 4,200 period for the bulls. Bears, again, it's going to be a struggle trying to get through all this support, but I think you get the right catalyst, could be a strong possibility. Bitcoin started selling off pretty heavy today. Again, there's a lot of the whole SEC and talking about essentially removing staking is becoming a big thing and a big issue. So you're starting to see crypto just take heavy hits here. So we'll have to see how that does play out. The dollar continuing to try to bump against this 50 EMA. Wouldn't actually be surprised if this thing actually gaps up over all of these, all these different resistance points here, and potentially starts running. Right, I told if the bears want to really get this thing going again, they need to break back over the 105. That's almost probably going to have to be a gap play to be able to do that. Perhaps we get bad news overnight. Who knows? But we'll have to see how that does play out. Tesla, again, very strong. Finally starting to show. It ran this morning up to the 212. Again, it's really running out of gas. You have this absolute parabolic move. The market's going to take at least half of that back. Now, given we're getting out of earnings mode, it will slow down. Maybe we'll get half of that back. Again, if there's a bigger catalyst, maybe we can see even lower. We really have to see. Again, Tesla has been selling massively, so this is more just this is really just a dead cat bounce because it did absolutely nothing but selling for a long time, for many months. Again, these red dashed lines are option expirations, but they're essentially done by months. So you're looking at all these months in between that essentially Tesla has just been selling off. So you can really just say that was a dead cat bounce, and then we'll see what happens from here. But bulls, if you want this to continue, they need to break over the 216. Bears, you can see at least a pullback to the 193. If we do start selling below that, you have a lot of support here with monthly and daily. It does need to break that back down below that. Again, depending on what kind of feel, we're going to need that for the index anyway. So if we do start getting some really bad news, you're going to need to break that. Same thing with Apple's finally above some major support. You're going to need a big catalyst to break back down through here. We have big enough catalysts. We just have to wait and see. Again, the market, if, again, core inflation comes back up, that's going to be a big problem. Something I've been talking about is everything is looking the same and you're getting these parabolic moves. I don't like the way the core is setting up, but that's just me. It could be nothing. It could be something. You never know. This is why I say it's better to just wait and watch and see what happens first. BA, again, a lot of consolidation. Everything's looking the same, very overextended, consolidating. This thing actually going to start selling off. If we start pumping off of a core inflation report, that core inflation has to be absolutely outstanding, in my opinion. If it's just mediocre and we just take a little bit off, that's not a good sign. If we open up anything over 6.5, I think you're going to start drawing panic. The higher over 6.5, obviously, the more panic you're going to induce. So you definitely have to be careful about that. Banks rejected the 144, so it really needs to break out over 144 open if you want this to continue. Again, banks have been taking advantage of high rates, but we'll see. We'll really see how that does work out and how that plays out. We do start selling. You got a pretty strong support here at the 132 or 131 mark. It breaks that, then we are in for some trouble because, again, the banks are holding up the market, and if they give, that's going to be your first heavy selling, and then tech soon to follow. So right now, Tesla and Nvidia has essentially been guiding big tech because Google's been absolutely obliterated because they had you can look at that because I haven't brought that up, but I didn't bring that up yesterday. But Google's been obliterated because they had a presentation of their AI and it messed up, and that's definitely not what you want to do when Chat GPT and all these other AIs are doing very well. And so Google's been just in a downward spiral since then. So we'll see how this opens up. It's taken a huge hit. It's taken half of its move back. And this is what I'm talking about. I see the rest of the market doing this. See, it's already taken half the move back of this parabolic push, half of it back. I won't be surprised if this thing's down by 86 again here shortly, maybe even next week. It really depends on the market sentiment moving forward. But again, tough position. We'll have to wait and see. Tomorrow is only Friday. Be mindful of that. Then we got next week. Next week, big thing is going to be core. So look for that in the weekly update. Talk more about the core and kind of what to be watching for the week. We still have some big earnings going on. So there'll probably be some good ones to watch next week as well. Just keep them on the radar. But ultimately, right now, we pretty much have all the information we need. We just need the core. And then that would be the final pin, essentially, to direction that we could get. Again, I'm still leaning heavily to the downside, even going into this core, and realizing that even if we still get a slight decrease in inflation, I think the market is still going to pull back and sell. Again, you're getting a natural cycle as well, so you have to keep that in mind. But nonetheless, I don't want to draw this out any further. So if you made this far, I do appreciate you. Go ahead and drop a thumbs up. And until next time, I'll see you guys later.